The Fed has just announced that they plan on ending the monetary policies they took up before the pandemic. At the Federal Reserve's final meeting of the year, they announced that the committee decided to double the pace of reductions in its asset purchases.
I can see that bullshit from a mile away. You can step my money about a mile away. I got 3 white bitches like it's powder day. Me go with the rolls like a Chardonnay. And all of my bitches since they call them Barbies. She looking back like I'm blessing, baby, no way. And lately I've been on that juice. On the train, on the train.
The Fed said it plans to begin tapering asset purchases. They were buying $120 billion per month and will reduce purchases by the Treasury by 15% total, $5 billion less going towards the mortgage-backed securities. And it seems like in his most recent appearance, he has learned his lesson and will not refer to inflation as transitory or temporary. He said inflation should be getting back to normal next year. But if I had to estimate, I'd say we've seen inflation this year of at least 13 to 14%. Based on the, quote, assumptions about inflation and growth and unemployment, the Federal Open Market Committee says, but in the long term, this will look like 3 interest rate hikes in 2022. The Fed announced that it would be tapering off of its program of bond buying, which provides support to financial markets. But what could this mean for supply chain constraints? For a long time of 2021, we saw the shipping industry struggle to keep up with demand, and we saw what that meant for small businesses and stores that were waiting on product to be delivered, and this increased their turnaround time. So as Powell puts it, production takes a long time to respond. This offers up a new theory about what could be causing the supply chain shortages. When asked about the changes in the labor market, he said, quote, "There are fewer people in the labor force now than there were before the pandemic." And there's a big question about whether that's just the big structural change or whether people might still jump off the sidelines to get jobs. And we've never been through this before, so we don't know. But if the labor force participation rate is just lower now, then the labor market is pretty tight, and that makes sustained inflation a bigger threat. As Powell put it, production takes a long time to catch up changes in demand. The supply may exist, but if the demand isn't there or vice versa, then markets aren't being as efficient as possible. He said, quote, "These problems have bigger, larger, and longer lasting than," he said, "these problems have been larger and longer lasting than anticipated, exacerbated by waves of the virus. While drivers of high inflation have been predominantly connected to the dislocations caused by the pandemic, price increases have now spread to a broader range of goods and services."